Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for Monday, May the 1st, 2017. Jumping right into the action here, you see that gold has so far, starting off this new trading week, given up the bullish momentum and is quickly headed back down, testing trendline support here. This being the case, we still have a little bit more ways to the downside to go. This could pull back all the way to 1239.40. As long as we don't close below that this week, I think the bullish picture, you could still make an argument for bouncing off the trend line and then going back testing the higher end of the range. Technically speaking, we're trading within a range right now. The top of the range is 1297.40. Currently, the bottom of the range is 1248.20. All right, so that is the trading range that we're in. We're trading within the weekly bar of right here, April the 10th of 2017. That's what we're doing. We ran up from 1248.20 all the way up to 1290.70 that week. So that's the trading range we're in. $40 to $50 trading range. So it's going to ebb and flow. Test the lower end of the range, rally back up, test the higher end, come back down. So that's kind of what we are right now. All right, so we're not crashing or anything like that. It's just we're at a crossroads, just like I indicated in my last video. Either we're going to be off to the races again and go back and trade toward the higher end of the range and keep doing this back and forth until it pops us out of the Kumo cloud here. All right, so again, you're 3 to 4, actually I want to say 3 to 5 weeks out is my projection to get us out of the cloud. We break out and get a nice strong close above 1300 and then rally from there. But between now and then, we're just gonna go here. Look at the bottom floor of the Kumo cloud here. This range of the Kumo cloud goes all the way down to the 1214 level and comes all the way up here to the 1295.70 level. All right, so you got almost $100 consolidation cloud here. What are you going to do with that? It's not a whole lot you can do. Remember, you can't really trust price action inside of a Kumo cloud of death. Prices tend to go on the top and bottom ends of the range. And sometimes you even have false breakouts like you did back here on the week of March the 6th of 2017. Had a false breakout to the downside. You closed below the Kumo cloud, signaling that the market was going to not only giving up momentum, but possibly going to head down, and then you reverse sharply. So price action can be volatile inside of the Kumo cloud of death. Let's take a look at silver. Silver is a little bit different picture because it has been weakening, falling off of that cliff. It's in that free fall mode. Your momentum is starting to really push down a little bit, headed down. And like I said, this one it could go to 15. First support's going to be around the $16 level. Then from there, you're in the $15 handle. This market's going to really need to do some work this week. It's going to need to close above 1761 to put it into this downtrend. Will that happen this week? I highly doubt it. But that's what we need to do to put an end to the downtrend this week. Taking a look now at your natural gas. Natural gas is still strong. The natural gas is still strong. Closing above that momentum line last week. And we're staying above it now, pulling back a little bit. But as long as this market can close above 318 this week, your bullish momentum should remain intact. Looking at your GDXJ, looking at your miners, I do believe that JNUG and the JDST had reverse splits today. So you went from $4 and change, and now JNUG is like $16 or $17. So here it is. So those of you that don't know, that's what happened. All right, looking at your GDXJ, it's in free fall, as you see. No real supports in sight. Psychological support at 30. Then again at 25. Actually, if you get down, once you get past 30, 25 is your next target. It's wide open. There is no support down here. You're just wide open. We don't know where bottom is. This is your danger zone at 25. That's your acceleration point. If it hits 25, it accelerates. And boy, does it accelerate. Don't want to see that if you're bull. All right, if you're a bull right now, you're on the sidelines waiting for an opportunity, waiting for this free fall to be over with. If you're bearish, you're just holding on and enjoying the ride. No end in sight on there just right now. Let's see, looking at Bitcoin. I did warn that Bitcoin was going to go to 1,500. Well, we're just a few dollars shy of that right now. Any questions? I didn't think so. Here's your Bitcoin ETF, GBTC. As you can see, it's catching a bid and marching up to that 160 and 180 handle that I warned you about before. You see the pointer right here, back on the week of January the 2nd of 2017. Those of you that are students of the Learning Academy know all about this. You know what this is, and this is where we are. Happened back here. It's happening again right here. All right. Taking a look at, let's see, the bond picture. Giving up momentum still, getting weaker, heading lower, and it's probably going to come back down here to this 117 level. Maybe you'll find support there. Who knows? Looking at the US dollar. US dollar's maintaining a bullish stance because it's hugging the trend line support and ceasing to drop further at this point. So just maintaining support. Fierce ramps coming up. So I see prices heading higher. On the UUP, I see it's getting back to 26.5, maybe even 27. Based on this ramp, it should be able to get back to 27. All right, we'll finish up with some oil. All right, oil is still moving sideways along the consolidation line until you get up to this enormous ramp. All right, and this will catapult prices back to 36. All right, so that's where we are right now. It's probably going to take about 3 to 5 weeks out before we get back up to the ramp, but we'll see. We could probably do it in 2 weeks. We'll see. At the rate this is going, if this week stays within the range of this bar, then you could have a little bit of hope, especially if it starts to retrace some of this movement and get back up toward the blue momentum trend line resistance. All right, people have been asking me, what do you think about the euro? What do you think about Forex? What about Forex? What about Forex? Okay, here's your euro. As you can see, it came down here. This is ticker FXE, tracks the euro. Got down to par 46 or $100.46, and now you're back up above the trend line resistance. A close above this opens the door back to 108. So this one right now is a head scratcher because you got this gap here. So probably back and fill, probably spike below trend line support only to get reverse and rally back. So this blue momentum trend line right now is bullish as long as it closes above 104.69 on the euro. All right, the pound FXB having trouble with the trend line resistance, so therefore as long as it can stay above 124.11 here, then that should keep the bullish momentum locked in. A close below this opens the door to revisit the lows down here. All right, and you have resistance overhead at the bottom of the Kumo cloud. It's going to be hard pressed to punch itself inside of this cloud here. All right, so let's see. Let's take a look at the Aussie. Aussie's behaving like gold right now. It's maintaining this hugging of the trend lines, back and forth, back and forth. So you're trading within this range here. This is where you are. Momentum is flat. It's not trending. It's just dancing at the top side of the Kumo cloud, hugging the trend line. Slightly bearish, only because you've been below trend line momentum now. This is the third week. You got green on the screen so far. A close above 75.47 would open that door for the Aussie, and it should get a boost from there. Ticker FXA. Failure to do so, though, we don't know, because the Kumo cloud of death is a liar. You never know what can happen. So, can it fall out of bed? Yeah, but you still got quite a bit of cushion. I just see it as flat. There's nothing going on. Absolutely nothing is what I see right now. Can't call it either way. All right, looking at the Canadian dollar FXC, and you can see it's just falling like a rock. It lost all momentum. It's losing all hope. It is in free fall. Looks like it's starting to set up for the next leg down, which could be way below here. I think we're going to get deep into the 71 handle on the Canadian. All right, so that's all we got time for right now. So remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Do yourself a favor. Educate yourself. Come over to the Learning Academy. Learn how to trade these volatile markets. Learn and be the first to know where the markets are headed before they head there. Be ahead of the crowd. Know what the central banks are planning and doing before the news even hits the wire. You'll know first because you'll know what the price action is telling you by following the weekly pulse wave price triggers. PulseWaveTrading.com. Don't forget to like this video and share it with a friend. Peace. Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for Monday, May the 1st, 2017. Jumping right into the action here, you see that gold has so far, starting off this new trading week, given up the bullish momentum and is quickly headed back down, testing trendline support here. This being the case, we still have a little bit more ways to the downside. The 10th of 2017. That's what we're doing. We ran up from 1248.20 all the way up to 1290.70 that week. So that's the trading range we're in. $40 to $50 trading range. So it's going to ebb and flow. Test the lower end of the. This could pull back all the way to 1239.40. As long as we don't close below that this week, I think the bullish picture, you could still make an argument for bouncing off the trend line and then going back testing the higher end of the range. Technically speaking, we're trading within a range right now. The top of the range is 1297.40. Currently, the bottom of the range is 1248.20. All right, so that is the trading range that we're in. We're trading within the weekly bar of right here, April